Hello, and welcome to BeLoanReady. What are points? Should I pay points? Okay, so you're shopping for mortgage rates and you're being overwhelmed with all kinds of quotes. We would always advise you to make sure the quotes you are receiving are apples to apples, because not all quotes are alike. We're not trying to scare you, but after all, knowledge is key to making great decisions. One element of mortgage rate quotes that can cause confusion is the concept of points. And no, we're not talking about your score in D&D. What we are talking about is fees that could be a part of your mortgage loan. And just a heads up, points, discount points, or origination points can all mean the same thing. A mortgage point is considered an origination fee. A point is generally 1% of the loan amount that is paid upfront at closing. And paying this point generally buys down your mortgage interest rate. Okay, so get ready, because it's the exciting part. It's fun with numbers time. Fun with numbers time. Fun with numbers time. Fun with numbers time. Okay, your mortgage is $100,000. Your offered rate from a lender is 4% on a 30-year fixed-rate product. You dig? The lender tells you if you pay a point, you can reduce the rate to 3.75%. So, if you're willing, you could pay $1,000 to reduce the rate from 4% to 3.75%. Stop the bus. I know what's going through your mind. I paid for a point. Why didn't the rate go from 4% to 3%? Because. I said because. Now stop it. I'm not explaining it any further, and you'll go to bed without dinner. Actually, it's more of a mortgage industry rule of thumb. Each point paid gets you roughly a quarter point in rate reduction. Now, before we consider whether paying for points is a good idea, let's also take a moment to realize that you can receive closing cost help from your lender in the form of a lender rebate. If you receive a lender rebate, that means you are most likely receiving an interest rate that is higher than the going interest rate. Psst. Guess what time it is? Fun with numbers time. Fun. Nah, I'm just kidding. But we are going to get weird with the numbers. Okay, same example as before. You need a $100,000 mortgage, but instead of 4% as your interest rate, you receive an interest rate of 4.25%. But now, your lender is able to give you a lender rebate of $1,000 towards your closing costs. Is that a good move? I don't know. Just kidding. It depends. No, seriously, it depends on your situation. Remember, you are paying a higher rate for the term or time you have the mortgage loan. Most likely you will pay well over $1,000 in lender rebate over the course of the loan. So just keep that in mind. Anywho, back to buying down the rate by buying or paying points. Is it worth it? It depends. Again, it all depends on your budget, the cash you have on hand for closing costs, and how long you may be planning on keeping your loan or property. Even though the points you bought came at a price, you will get the monthly benefit of a lower payment. You may want to run the numbers, or an amortization schedule to see how long it takes to recoup the monies you paid in discount points. So at this time, put your tray table and seat in the upright and locked position as we prepare for landing. Your arrival into mortgage financing just got a little bit smoother. Jeez. Wow. Okay, I'm sorry, that was really cheesy. That was bad. But seriously, look who's flying first class now. You are. And apparently it's exhausting? Well, that does it for our video, What Are Points? Should I Pay Points? We hope you found this helpful. And as always, should you need assistance at any point, don't be afraid to hit the help button, and a mortgage mentor will be right there to assist you. Thanks so much for watching, and we'll see you in the next video.